benefited a lot from commodity prices. I guess one problem for me is that the year-on-year effect of that is now going to be greatly diminished because it's all sort of come through. So India, in a way, has had a lot of the easy gains in terms of it managed to cut its subsidy for fuel at the time when oil prices fell, which is great. It's done some fiscal consolidation, but a lot of that has come from one-off things, so using disinvestment to reduce the deficit, cutting down on capex spending, which you can only do so much of. Going forward, obviously the banking system still has asset quality issues, and so there's a question over how rapidly credit provision can ramp up. I think one strong side of the Indian macro story is the consumer. We're seeing a good uptake in consumption there. On investment, as asset quality would suggest at the banks, a lot of corporates are not in a position to invest, but I think if you look at a more granular level, a lot of the really high leverage is concentrated in particular sectors, utilities for example, which is obviously bad news for infrastructure spending, but it does mean that there's a large part of the corporate sector which could spend if it saw the need to. So as consumer spending comes in a little bit higher, potentially corporates can invest more. So I think growth can continue to marginally edge up for the next couple of years.
What do you make of the GDP print in India? Because of course it continues to court controversy. Do you buy the 7.5%, 8.5% numbers? The 8.5% of course is the forecast.
Sure, I mean it's growing faster than China apparently, which is fantastic. I think it's difficult. So when you compare it to the old GDP series in terms of how it matches up to higher frequency data, the old GDP series did actually quite a good job. So you say you compare combined industrial production, retail sales, or consumer spending rather, and other measures, and compare the GDP on the old measure, they move more or less together. The new series doesn't really seem to bear much relationship at all to that combination. And so it makes me think that something isn't quite right to the numbers, and so I'm a little bit sceptical about that, but as an emerging market economist, you get quite used to that problem.
So given what the new series is and what you're seeing as far as high frequency data is concerned, what's your own forecast as far as India is concerned?
So again, revising them at the moment, but it's currently at around 7.2 for this year and around 7.6 to 7.8 for next year.
So you don't see an 8.5% kind of growth number for
I
India?
would be very sceptical if that came through. It's difficult to see where that would come from as a stimulus. Given that we should have had a much bigger jump this year, given all the external benefits India's had from commodity prices, given the easing we've had, given this government spending we've had, it's difficult to see why all of a sudden growth would jump by more than 1% next year. I would say that 8% growth is achievable in the medium term for India, but we need reforms first. There's so many structural factors holding it back. It's a long way from being the next China in terms of its contribution to world GDP.
Even though it might be growing faster at this point in time than China. But let me ask you this, because you were talking about structural reforms. What has been the big disappointment on the reform story as far as you're concerned? The GST, I would imagine, is the big one, and that, of course, is stuck in Parliament. We don't know whether it will finally get cleared in this session or not. But beyond that, what have been the other structural reform misses for you?
I think it was the banner reforms that were trumpeted by Modi when he was coming into power. So like say GST, land reform as well. I mean, we always thought that's a very contentious measure. We didn't expect it to pass easily or quickly, but we thought there might be a bit more progress on it by now. I'd say actually GST is more of a disappointment because it seemed like it was an easier one to implement and that you could do a bit more horse trading and get it through. Land reform is more difficult to reward to compensate the losers in some way. And it's, there are more vested interests against it, whereas GST to us, I mean, also I'm not an Indian politician, so I'm grossly simplifying the situation, but it seemed like it should be a slightly easier one to get through.